Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ND Paper Annual Report. Nine Dragons Paper Holdings Limited offers a diverse range of businesses and services, including manufacturing and selling packaging paper, producing printing and writing paper, specialty paper products, and pulp manufacturing, craft, test, white top, and coated linerboard production, corrugating medium, coated duplex board, and grayboard product manufacturing, uncoated wood-free, and office paper production, container board, craft paper, and packaging product manufacturing, recycled printing and writing paper provision, gypsum board cover paper supply, corrugated cardboard, and carton box production, insulating paper products. The stock price of Nine Dragons Paper Holdings Limited has seen a remarkable 74.8% increase over the past year, driven by several key factors. The company's strong financial performance, with a 135.4% year-over-year increase in net profit and a 6.3% rise in turnover, was a major catalyst for investor optimism. Additionally, the restart of its Wisconsin mill in March 2025, which had been idled since April 2024, signals a positive outlook for increased production and market demand. Furthermore, positive industry trends and analyst optimism have also contributed to the stock's surge, with analysts upgrading their earnings per share estimates and the company outperforming both the U.S. market and the U.S. forestry industry over the past year. The primary drivers of revenue growth for the company are multifaceted and can be summarized into several key areas. Firstly, the diversification of product offerings, including laminated paper products, has contributed significantly to revenue growth. Additionally, the increasing demand for environmentally friendly packaging solutions and personalized products across various industries has driven sales. The company's breakthrough in sales volume exceeding 20 million tons for the first time is another significant factor. Furthermore, the increase in net profit per ton of paper and total net profit growth by 177.3% year-on-year to RMB 12.2 billion have also contributed to revenue growth. In terms of specific products, linerboard, bleached folding boxboard, and high-performance corrugating medium have seen significant increases in sales volume. The company's focus on optimizing its supply chain, including vertical integration of wood pulp supply chains and stringent control over production costs, has also helped drive revenue growth. On the other hand, the primary drivers of revenue decline include a shortage of raw material supply due to China's waste import ban and fluctuations in raw material and fuel prices. Additionally, short-term production gluts in the market have affected selling prices, while overcapacity in production has led to competition and lower prices. Overall, the company's ability to adapt to changing market conditions and optimize its operations has been key to driving revenue growth. However, it must also navigate challenges such as raw material shortages and fluctuations in prices to maintain its momentum. Net income and profit margins. A significant increase. The company's net income has experienced a substantial increase, rising by 135.4% from RMB 750.7 million to RMB 1,767.1 million. This growth is even more pronounced when compared year-on-year, with an impressive 177.3% increase to RMB 2,201.7 million. The profit margins have also seen a notable improvement, with the gross profit margin increasing by 2.9 percentage points from 9.6% to 11.5%. This significant rise is attributed to various factors, including breakthrough sales volume, increased net profit per ton of paper, and strategic initiatives such as cost reduction, efficiency enhancement, and technological innovation. The company's ability to optimize resources, expand production capacity, and develop premium products with high profitability has also contributed to its improved profit margins. The company has made a significant turnaround in its financial performance, shifting from a negative to a positive operating cash flow. In 2025, it generated RMB 4,985.4 million in net cash from operating activities, a stark contrast to the previous year's loss of RMB-794.2 million. This improvement indicates that the company is now able to cover its operational expenses and generate sufficient cash to invest in growth initiatives or pay off debts. The company's debt level has undergone significant fluctuations over the past few years. Initially, borrowings increased significantly from 2022 to 2023, but then decreased in 2024/2025 compared to 2023. However, total debt still increased from RMB 67,179,081 at June 30, 2024 to RMB 80,488,424 at June 30, 2025. Net debt also rose by RMB 7,396,170 during the same period. In terms of interest expenses, there was a slight increase of approximately RMB 16.4 million, 0.7%, from FY 2024 to FY 2025. Interest expenses as a percentage of revenue remained relatively stable at 2.65% in 2024 and 2.68% in 2025. The increase in total borrowings may have contributed to the change in interest expenses, but the exact impact is unclear due to inconsistencies in the provided information. Management's outlook and strategy. The company aims to maximize profits by leveraging its core competitive advantage and controlling production costs. To achieve this, it will focus on increasing market share through strategic partnerships and investments, while also improving operational efficiency through digitalization and automation. Additionally, the company is committed to reducing its environmental footprint and promoting gender diversity within the organization. The company has a history of paying dividends. In fact, it is explicitly stated that dividends, yes. This indicates that the company prioritizes returning value to its shareholders through dividend payments. The specific details provided include an amount of RMB 400,395,000 paid out in 2025 and an annual rate of 14%. Concerns about inventory buildup and supply chain disruption. There are growing concerns about inventory buildup and supply chain disruption in the industry. Multiple pages highlight these issues, indicating a potential problem on the horizon. Pages 17, 103, and 183 specifically mention inventory buildup, while page 25 notes possible supply chain disruption due to raw material shortages and price fluctuations. The waste import ban has also been identified as a risk factor for raw material shortages, page 36, which could exacerbate supply chain issues. These concerns suggest that the industry may be facing significant challenges in managing its inventory and maintaining a stable supply chain. That concludes the financial summary for ND Paper. Feel free to comment below, and I will be happy to answer them when possible.